Foreign inflow came in through foreign direct investment, portfolio investment, and remittances. I've mentioned it severally. Trade in goods and trade in services are the one we have control over. How do we then manage? Understanding foreign exchange management. Key aspects of managing foreign exchange include number one, the foreign exchange market. What causes fluctuation in the market? Economic data, interest rate, inflation, geopolitical events. In Nigeria, the reason why is interest rate high in Nigeria? Because of what? No. Why is interest rate high in Nigeria? Because of what? Inflation. Exactly. Because they need to contain inflation. And to contain, inflation is likely imported inflation. You know what imported inflation is? Imported inflation is inflation that is caused by what you import into the country. So, for example, because our exchange rate is high and we are import dependent, we import goods of high value. To sell it, we sell it at also what? High value. Imported inflation. Now, if we want to reduce that FX rate for sane economy, that economic theory and principle work, if you increase MPR, that will increase interest rate, that will increase money market rate, that will increase investment in money market. The money coming into the market as investment, Forex coming in, means we should have more Forex in the economy. More Forex in the economy means there is abundance of supply. Abundance of supply means there should be a fall in price. Do you understand what I'm saying? Economics now, law of demand and supply. If there is increased supply, what happens to price? When there is increased demand, what happens to price? So the idea is to bring in more Forex. That's actually why MPR is high, which makes interest rates become high, which makes cost of living crisis to be upon us. Exchange rate determination by demand and supply, inflation and interest rate, and government policy and central bank. All these affect what kind of rate you are going to get in any economy. But whenever there is a foreign exchange risk, how does it affect businesses? Transaction risk. Transaction risk. In December, I did a shipment. I did that shipment November. Payment came in December. I estimated based on, I think 1.5 or 1.6. But when they started this FM, or BFM, what they call it? The rate crashed. I don't know if you remember in December. Can you remember? If you remember, I did 2 pay. And immediately, the rate crashed, and I sold at a loss. Why? That's a what? Transaction risk. But in translation risk, if I keep my asset in FX, and at the end of financial year, I'm preparing my financial statement, I'm going to convert that FX to Naira, and in translating it, my asset can either go up or come down. Translation risk. Economic risk. Because of high FX rates in Nigeria today, our manufacturers are more competitive when they export. Why? Because when they bring out the FX, they will convert at 1,500. But our importers are suffering. Because what? They have to spend more money to be able to do importation. So economic risk. Long-term currency risk affect competitiveness. So exporters are very competitive, but a lot of importers follow through. Are you aware? But for some that can't compete, some are. Do you know the number of importers are now exporting? Are you aware of that? You know why they are exporting? To generate Forex. So they can be able to contain the pressure, and that will make them more competitive at the end of the day. Forex, to minimize the risk of Forex, of course, you do hedging strategy, forward, currency swap, options to lock in the exchange rate, or national swap, national hedging, where you match revenue and expenses. So we have partners in UK for some of our programs, in US for some of our programs. When we export, we don't sell the dollar most of the time. Occasionally we sell, but most of the time we don't sell because we are going to use it to pay for what? To pay for what? Services now. Like London Shop Banking and Finance, one of the partners we work with, and we have to pay them in FX. So rather than bank collecting Naira from students and converting to dollar, We use the naira to export and generate FX and then use it to settle the FX rate. Most countries have foreign exchange control policies set by the central bank. This policy regulates currency exchange limit, international capital transfer, foreign investment, and trade payment. Effective management ensures stability, cost efficiency, risk management in global financial operations. Businesses can master foreign exchange management, gain competitive edge in the international market. Now, buyer and seller that buys and sell goods and services overseas, and people and businesses who invest in factories, markets, and properties are all concerned about the movement of foreign exchange. Many businesses have no choice. When you want to do international trade, sometimes you have no choice on the currency to use. Sometimes because you don't have bargaining power, if the person insists it's dollar or euro or pound, or conventional currency for that transaction like crude oil, usually in dollars. In some countries, there is a regulation not to touch some currency. Not to touch some currency deliberately because of political economic issues or sanction issues with those countries. Exchange rate between countries of most countries often change significantly in the short run or most greatly in the long run. Significant changes in exchange rate between countries often lead to increased or decreased competitiveness. We talked about this before. People making decisions regarding international trade or investment need to understand what drives the changes. In Nigeria, what drives? Sometimes the drive in Nigeria sometimes is likely, artificial. People sometimes hold this thing. Why? I've told you that dollar is an investment instrument in Nigeria. People want to keep dollar deliberately. Why are they keeping dollar? Because naira can depreciate. So if naira depreciate, their money remains rather than keeping naira. It's possible for an exporter to specify what currency should be used. If it's possible, in a particular transaction, decision is often of greater importance to them, and the importer may require that his own currency be used, otherwise the exporter can choose that his own currency be used. So sometimes you end up using the foreign currency. For closing the world today, do you know in the world today, okay, I think you have seen that yesterday, what percentage is US dollar in the world? Almost 50%. Almost 50%. So BRICS is trying now to reduce it. That's why they are creating their own currency, and if they create it, those countries are too large in terms of economic size not to affect dollar. And Trump will do everything, including slamming Nigeria with additional 10%. So we can be paying 24% for good imported from Nigeria. If they go ahead to take any decision that will affect US, because against US economic interest. Against US economic interest. Why? Because you say you want to trade in your own currency. Managing FX, forward contract, you are familiar with that, right? Yes. Forward contract, futures. Future is a standardized contract traded on exchange. Now, in futures, non-deliverable forward is futures. Non-deliverable forward is futures. In forward contract, you provide the total amount of money. In future, you provide the difference. Does that make sense? Yes. If I'm buying $1 million, if I do forward, I must provide naira equivalent of $1 million. If I'm doing futures, I'll provide the difference. If the rate move against me, I'll provide the difference. If it move against me, they will give me the difference. If it move my favor, I'll provide the difference. Do you understand? That means if the rate was 1,600 when I bid it, now it's time maturity. The rate is 1,550. I'm going to give 50 naira to the exchange. But if the rate is 1,650, they will give me what? 50 naira. So a lot of people actually trade in futures, speculating to be able to make what? The spread. Which means it might be against them, it might be for them. I'm basically insuring. I'm insuring. What does it mean to insure? The rate is today 1,550. I locked in that rate, pay a premium. In future, when it is due, if the rate is 1,600, I will still buy at 1,550. If the rate is 1,450, I can choose not to. In forward contract, you cannot choose not to. In option, you have the option not to choose. You can choose not to because you have option. Because you have paid a premium. You have paid a premium. Currency swap, exchange of cash flow in different countries between two parties for a set period. Used for long-term hedging between multinationals. Multinationals do this a lot. I need a loan in Naira, I need a loan in dollar. I'm in Nigeria, I can help you with it. In fact, I need a Nigerian is doing in Germany. You know what he does? If you are an importer, you want to import from Europe, you pay Naira in Nigeria. He will use Euro to buy for you. That Naira keep building up, abi? When a German company in Nigeria want to repatriate the money, what will happen? They want to transfer money rather. They want to transfer money to Nigeria. A German company in Nigeria transfer money to Nigeria. What do? They give him the euro. What does he do? He's just swapping currency and just making spread on it. Just swapping currency and making spread on it. And a business can easily do that. Why? Because you can easily use it to hedge against currency fluctuation. Money market hedge using short-term borrowing lending. This is very common. A Canadian exporter expecting euro payment, take a short-term loan in euro, reducing FX risk. So sometimes today, banks, if I'm an exporter, I won't take loan in Naira. I will take loan in what? Dollar. Because I'm expecting dollar. Now why would I take loan in Naira? I'm expecting dollar. But in the traditional natural hedging, that's what I explain, where I am an exporter, I am an importer. As an exporter, I'm exporting and getting dollar. As an importer, I'm importing and paying in dollar. So I'm able to hedge. In fact, the businesses in Nigeria today that no import business can be sustained in Nigeria if you don't have an FX management strategy. You can't. A lot of businesses have incurred huge loss because they are not conscious of this. They are not conscious. That's why international we have a CFO who understands international financial management and is monitoring this every day and is taking position and decision on a daily basis based on what you can see. But for other businesses, particularly SMEs or commercial banking people who don't have that, some people, it is when they have the radar, what can we do in this situation? Can you imagine that? You can't be dealing in FX, either as an importer and exporter and not have an FX strategy. You cannot. If you do that, you can be caught in between Nigerian. May Nigeria not happen to you? Although I saw a video recently, I love the way the lady described it. May Nigeria happen to you? And he was talking about good thing about Nigeria. You know, I know some of you want to talk about me. I'm a Nigerian, and I love Nigeria. Some people are Nigerian in the body, they're not Nigerian in the spirit. If they get opportunity today, they will leave. Have you noticed in Nigeria that the billionaire are not doing it? Have you noticed? Have you noticed? No. There's no way you will make the kind of money making in Nigeria in another part of the world. I'm serious. The people living in Nigeria are the middle class. Majority of they can buy citizenship now. What are they going to do? You will stay 5 years, Abby. You stay 5 years, Abby. They will buy it at once. Now you have concluded this program. Now you can consider doing certified intermediate trade professional. And you can move from there to certified advanced trade professional. And do certified specialist in trade finance. And do executive diploma in export planning and export trade finance and become a chartered trade specialist. Any question? As I conclude, I would like to say to everyone, if you want to reduce demurrage, if you want to reduce discrepancy document, if you want to reduce delay in trade transaction, if you want to reduce debt that results from all this, aggressive drive towards understanding the processes, the paperwork, and problem of international trade is the way to go. Thank you very much.